What's good, people? We're back again, and I just want to give an update. So, in my previous video, I set the limit order, and as you can see, price came back and tagged us in perfectly right at the entry, and then now it's starting to push up, which is great. Currently, we're in like I don't know, a 1.5 hour profit, and yeah. So, like I said yesterday, I did say that I just wanted to place the limit order because I was about to go to sleep. It was around this price was around here when I made the video, and I said I'm going to place my limit. I explained my entry reasons and everything, so if you want to understand better, you can go and watch the previous video. But one thing I did say in the video is this was going to be my initial entry, but if price came back and then gave me a nice H1 reversal structure, I would probably enter a scaled in position. Now it did provide a reversal structure, but it's not one I liked, so I didn't enter. But just for the sake of technical analysis and information, let's review what happened actually. So when price pulled back in with this big bearish candle, it then created a bullish candle, right? Bearish candle, bullish candle. So that provided a H4 data point, right? So that was good for me. So that's where this blue line is. It's identifying that H4 data point, right? So when you go down to the H1 candle, you see that this is the support, right? So price came up, dilly-dallied a bit, and then it came out. This was a 2 o'clock candle. It came down, tapped that, so that could have been an entry. Honestly, I saw when this formed, but I didn't like it. I was like, okay, because you have no idea when price is here. If it comes, is it going to stop here? Is it going to reject here, or is it going to go down deeper? So of course you'd want to see more. So what happened was it had this very nice pin bar rejection, right? And price pulled all the way back, and that closed at the hour. And now coincidentally, that closed, the 2 o'clock candle closed at 3. So when that's when a new 4-hour candle would have formed. So that's here. This candle opened at 7. As you can see, if you come down here, you can see the time. So it opened at 11, it closed. So for 4 hours, 11 plus 4, that's 3. So it would end at 3. So the new 3 o'clock candle will start here. So that's exactly when that 1 hour wick candle formed. So right after this candle starts to form around here, because this is closed right here, right? So the next one would open here. Now I have a new H4 data point, and that's what's identified here with this 4-hour candle. So now we have one data point here, which had been wicked and rejected, and now we have another data point. So I'm trying to explain to you how you may have entered. I saw this, but I chose not to enter. But had you decided to enter, this is how you could have done it. 1, you could have been a bit risky and just entered here based on this. 2, you could have waited for the wick rejection, which happened, and then you could have entered immediately with your stop below here or your stop below here. Now, the third way you could have entered is upon seeing that there was a new H4 data point and the fact that we just wicked this support right here and the entire structure is bullish. Third way you could have entered, be like, okay, you know what, I'm enter right here. I remember, if you guys remember, yesterday I was talking to you about the differences between V and A support and resistance level, and how those are the strongest ones, especially for break and retest. So as you can clearly see here, this was the A resistance, and once it broke, right, closed above, we had a candle close above, not only on the H1 but also on the H4. This would have been a nice place for price to come back, retest, and then continue on forward. Now, of course, you don't know how deep that retest would go, right? That's always a risk, depending on when it comes to break and retest strategies. You don't know how deep the retest is, because sometimes it can really test your patience, right? It can go all the way to the max pain threshold before reversing and still maintain that same structure. So another way to enter is, if you were being a bit maybe aggressive, you could have entered right there on the retest of that V formation, right? That would have been an entry, and you could have put your stop somewhere below either this or this. I would prefer to put this because this is a protected, well, actually at this level this is a protected low as well, because you see it swiped this low and then it pushed up and broke structure. Well, maybe not on the H1, but clearly on the lower time frames, right? But at that point you wouldn't have known that anyway. So anyway, you could have put your stop below here or below there. Maybe put it below here just to be safe. Maybe that nice 150 pip stop. And then, you could have just, as you can see, clearly it just tapped and then took off, right? That would have been a really nice entry. Now, I did see this when it was happening. Why did I not enter? Even though yesterday I said I will. Well, first of all, I wasn't too convinced. I wasn't too comfortable about this reversal structure, right? Yes, it provided a reversal structure, but it wasn't the way I wanted it. It didn't give me enough confidence. And two, because this price could easily come down deeper, dilly-dally within this entire range and still be valid, because this is the original setup: sweep, break of structure, pullback, right? Like, remember I said yesterday there was an internal, there was an inside bar here and there's a low here, and I was expecting it to come back here. People would have traded this and looked at this as a fair value gap, but really it's nothing more than just a liquidity grab, right? It just came here, took out the low, blah blah blah, reversed, and then now it's going for it. It's doing exactly what we outlined yesterday. So the reason why I didn't take it was, one, I didn't like this. It was big, you know. I wanted something like maybe 100 pip to maybe even less than 100 pip, 80, 50 pip stop. But this whole reversal reaction was 150 pips, right? That's below this low. So you're not even really truly safe. Sure, you're safe within this reversal pattern, but in the main reversal, which is this that I'm trading, I'm actually trading this. Never lose sight of what you're actually trading. I'm trading this pattern, not this pattern. This is just an entry confirmation, a reversal pattern, reversal signal to tell me that, okay, maybe this pullback is over. But that doesn't mean that later on it can't come back. Take that out. Still stay within the parameters of this price action leg and then continue to move forward. So when you combine those are the reasons why I chose not to actually enter the trade, even though, as you can see clearly now, it's paying off, right? I could have added a nice scaling 1 to 5. And you see a 1 to 5 would have hit way before this scaling would have hit. But anyway, you know, it's okay. I did enter with my full risk, so no regrets there. So we just removed that. And yeah, this is where it's currently at. Now it's currently just under 2R. I had a 250 pip stop loss. Now it's running at 430 pips. So we'll see how it goes. So yeah, this is just the update I wanted to give, and we'll see what happens. Maybe after we close above here, if we get a nice candle close above there, I might consider moving my stop losses to break even, just to secure my risk, right? But yeah, up until then, I think I'm just going to leave it. It's open risk now. Full risk is open on the table, and then we'll see what happens. So yeah, we'll give you an update later on maybe towards tomorrow, or if it hits TP today, or if it hits stop loss today, whatever happens. If there's a change, I'll give you an update. All right, peace.